Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Don't forget to subscribe, like, and share these videos. Tonight's video is significant because we received over 5,100 new buys from our intermediate models. Many of you are not aware of some of the aspects of the work that I present on this channel, as we've had about 10,000 new subscribers in the last 28 days. As many of you know, I am data-driven. The data that drives my analysis is the WaveTech process. The models are run on approximately 16,600 plus symbols. All of the signals that come on these symbols are process that I developed over the last 35 years. This gives me a unique viewpoint, as I'm not just looking at a couple indices and telling you what the S&P is likely to do or the NASDAQ. Even though I do a lot of technical analysis, the quantitative part of me is the most important. As many of you may be aware, we have a lot of investment advisors that are using our software to manage money. Because of that, we're likely to see somewhere between $2 and $3 billion of new buying just from our group alone. And if you look at the overnight futures, you'll see they're already up 1.5%. My hope was that we would get a lower opening today and get a better pricing. Regardless of this, this is a substantial event, which I'll be going through in detail shortly before I do the technical analysis for tonight's video. While this event is substantial, there are some cautions that I will go through when we go through the database that you need to be aware of if you're using the WaveTech research tool or if you're one of our institutional clients. I knew that we were going to get a substantial amount of new buys, especially if the S&P was up over 4% last week. NASDAQ up 4.6%, and the Russell and the Dow Jones both up 3% plus. So it was obvious that we had a broad market rally, and this was going to push a lot of things into the buy zone. The thing that is significant about all these buys is that the holding period is between 220 and 250 days, which tells us there is a 7 to 12 month rally coming. Tonight in the technical section, I'll be going through the long-term viewpoint as well as the intermediate and short-term aspects on the S&P, the NASDAQ, and other key markets that I'm watching. As we look back just on last week in that 4% rally, we saw the employment numbers come out with 4.8 million new jobs and the unemployment level declining to 11.1%. This was significant. I see a lot of comments on the channel that fundamentals don't count. Whether these books are being cooked, it does count. You can see from the action, even though we saw some selling into the close, which was mostly folks taking some protection before the long weekend just because of the COVID situation. Not only did we see unemployment numbers come in amazing, we saw manufacturing move to 52.6%, otherwise moving back into expansion mode. So manufacturing's coming back. We are seeing many sectors of the economy screaming back. Now, with all these buy signals that I was discussing just a few minutes ago, this is telling me something bigger is going on here and that the rotation in the market is going to continue in a very positive mode. This week will be typical relative to most weeks after the employment numbers are released, as we only have a few economic reports coming out. We're going to see PMI services, ISM non-manufacturing coming out. On Thursday, we'll see unemployment claims, and then on Friday, we'll see the PPI coming out. There's a couple of these reports that could be material, but overall, we continue to see these reports come in much better than expected. I've talked about this for the last 3 weeks now, and this is driving markets higher. One of the other events that occurred just today is that it was announced that Warren Buffett is putting a $10 billion bet on natural gas. Now, I'm willing to bet, even though he made a mistake in the airlines that I called him out on, he's not making a major bet in natural gas because he thinks we're going into a depression. It's interesting that this is his first deal with all the cash he's got laying around. This is generating a lot of talk around the street about this particular bet. This is going to continue to drive market sentiment even more bullish than it has been. With all the metrics that are coming out around our database and the technicals, let's take a look at them and see exactly what they're telling us is likely to happen for this week. We're going to begin by reviewing the WaveTech database. We're looking at the intermediate map right now. The symbols are 16,623. Currently 56.22% are long. This is up from 41.6 last week. I commented that we had been getting a lot of traction, but this is substantial what we're seeing going on here. The rotation is starting to occur, suggesting that we're going to see forward-looking a much stronger market and a more diverse rotation. We're seeing a new sector buy on consumer non-cyclical, but if we look at the breakdown here in the market summary, we have 12 sectors, 9 of them are long, 3 are neutral, 75% of the sectors are currently long. The only ones that are not are energy, healthcare, and utilities. Looking at groups, we're 53% long on the groups, and then the symbols were 56.22, or 9,346 symbols are showing that we are in intermediate uptrends. This is substantial. This database is likely to get to around 62 to 68% before we see it top out. So there's more new buys coming as long as we stay above some of the technical numbers that I will discuss shortly. Let's go to the All Stats page where we can see a much more intricate breakdown of what's going on. Looking at the daily, very little rotation is going on in the database. All the action is in the intermediate and primarily on the most aggressive model, which is 1.2. In just a minute, I will go through the dashboard on the Portfolio Expert website. If you are a current subscriber, we do have a free account, so you can see this if you want to go to portfolioexpert.com. That's no E in the expert. And you can sign up for a free account, but if you're a current WaveTech subscriber, you'll be able to see the breakdown that I will show you in a minute. But as we look at the positions overview over on the right, the average holding optimized is 206. On weekly 3.2, it's 225. On weekly 1.2, it's 168. So there's a little shorter duration that's occurring here, all of these new buys that I was talking about earlier. So maybe 160 to 220. In the opening comments, I talked about being 200 to 240. We're likely to see over the next couple of weeks a further rotation on the 3.2 models, which will give us that longer viewpoint as the markets unfold. But that means there's 80% of the duration ahead of us. 160 to 200 days is going to be a very valid look forward. Also, as we look at the positions overview, what this tells us is that the average gain on these symbols will be 0.29. There's another factor here that is important to understand. Some of these signals that are coming through are risky. You don't want to buy a symbol that has made a new high in the weekly patterns. Stay away from those. Those are going to be very dangerous. What you want to do is buy patterns, I'll show you here in a minute, that are in the mid-range or at the lower end of their 52-week pattern. We're going to click on the 1.2 long link here, and it's going to bring us to the dashboard showing us all 4,427 orders. I want to show you a couple symbols to illustrate what I was just talking about, the danger of some of these. And looking at these symbols, I noticed an interesting new buy. It is Dominion Energy, which is what Warren Buffett just bought. If we click on the R button, it'll take us to the research, and you'll see that it had just bought and then exited and is rebuying. I would not use this signal just because of the buyout, but it is interesting that the WaveTech model did figure this one out. This type of buy signal where it bought, it got knocked out, then it's rebuying the following week are usually the best signals. But there's quite a few new buys coming out in the energy area. Let's take a look at Greeley in the automobile sector. This is the type of buy that you want to do when you see these low consolidations. This is likely to be a really good trade. And I'm going to be working on some criteria for us to find some good buys like we did on the airlines, that there's some opportunities. This type of formation in this chart is exactly what you want to buy, even though it's been whipsawed on this model twice. The third time's a charm maybe, but this is a classic where the PPMs are breaking out, everything's going at once, and you have an excellent rating on this. But I want to be clear, don't buy any symbols that are making new 52-week highs. Try to buy them a symbol like this or in the mid-range of their last 52 weeks. Taking a look at the WaveTech dashboard, you're going to see a huge spike where it shows 2,744 new buys. Now this is the optimized buy signals. Half of them are the optimized models telling you that they have the best track record, and the other half of the trades are raw output from the database, suggesting that you want to make sure, as I showed you in some of the training videos if you're a WaveTech user, to make sure you put in the research area the symbol that you find, especially if you find it on a raw data chart like this. You want to ensure that it is actually the optimized model. You'll see here that we're 49% long on the equities, and as we look at the sectors, you'll see decent rotation, not a lot going on here, but the industry groups are continuing to get some traction, but most of this stuff is still 50 to 60%. There is plenty of rotation still likely to occur. If you flop this to the mutual funds, you'll see something more interesting, that the database has clicked up to almost 59% and a huge surge in the mutual fund area, which tells you that these baskets of stocks are kicking in. Now you're going to see allocation funds. These are all broken down by sector here. U.S. equity funds have moved up to almost 60%. International equities have kicked in. As we go through the subcategories, there's quite a bit of rotation going on here, some of it very positive. And as we go down, we get all the way down to the large growth, are all the way up to 80%. Large value is still underwater. And then we've got mid-cap blend. Small cap growth is coming on, which is very bullish. I'm still looking for a positive rotation for the small caps to lead the markets much higher. I believe that's going to be necessary to get the breadth of the market to the next level. Going to the long-term monthly on the S&P 500, I discussed this a couple weeks ago, and I continue to expect to see it move within the market grid. What I'm expecting here is to see the market staying within these bands between 34.59 and the 27.49, and more likely the 30.36 is going to be the downward extreme. For the moment, I'm expecting the market move higher toward the 32.80 level, ultimately moving toward 33.60 to 34.59 levels. Over the next several months, we should move toward this upper end of the range. As we look at the S&P cash, the overnight futures, if they hold the current values, we're going to be trading near the upper end of the market grid, which is currently 31.63 to 31.74. Futures are trading currently at 31.65. If we stayed right here at the open of the U.S., then we're going to see it open at between R3 and the RXT, or the extreme projection for the session. We could see the markets move even stronger above this level, as once we get to the 31.80 level, we will have filled the gap, and folks are going to be looking at 3,200 and ultimately that 32.32 level that I discussed in Friday's video. But make no mistake, this market is moving higher and there's very little downside at the moment. The key support in this market right now is at the 10-period moving average, which is coming in right at the 30.90 level. We're not likely to get closer to that level. A close above the 31.52 level on Monday will trigger momentum to expand and suggest that we're going to move up toward 31.80 to the 32.20 levels. Going to the weekly chart, the R1 is 31.69. We're likely to open up at that level in the morning. R2 is 32.14, R3 32.52, which will get us above that key number. And then the extreme is 32.98, which is not likely to be hit, but I would expect to see R2 be hit at 32.14. Now the key level on the downside is going to be 30.90 and then 30.45. I don't expect that we will get to those levels this week. If 30.90 is hit, that will be substantial support. If you recall, I talked about the cluster of values that was right at the 30.20 down to the 3,000 level. We saw it bounce off of there, and here we are now working on being 150, 160 handles off of that low. So momentum has switched. The weekly momentum, ppm1 is turned up, ppm2 is crossing its second derivative, and ppm3 is also turned very bullish. If I go over to the futures, you're going to get a glimpse of what's going to happen with ppm3, which has penetrated its second derivative, which tells us that the 40 period moving average, that all three of the underlying trends are trying to turn higher, suggesting that this is a sustainable rally. Relating to the review of the database, when we get above a plus 42, which we're now at a plus 56%, that triggers a sustainable rally and tells us that these support levels at 3,000, 3,100, those are going to be major support levels, and that the markets are likely to move higher just due to all of the new buying that's coming in and rotation that's happening in the sectors. Several commentaries ago, I talked about the NASDAQ going to 11,000. We're continuing to see this market move higher. We've traded near the R3 at 10,519 with a high of 10,504. We're likely to continue this pattern. We're seeing acceleration. ppm 1, 2, and 3 are all at very robust trend levels. Looking at the weekly market grid, R1 is 10,506. We're right at the R1 level. We're likely to go to an R2, R3, which will put us at 10,674, 10,842. Critical levels underneath the market is going to be 10,205 and 10,037. Those are going to be major support levels. We're not likely to see the market move below that level. Looking at the expansion on the PPMs on the weekly graph, this suggests that we're accelerating again with ppm1 at a plus 1.8, ppm2 a plus 0.47, and ppm3 0.78. These are very robust numbers. This trend is not going anywhere but up right now. The downside risk is minimal. Thanks again for watching. We'll talk to you tomorrow night.